Hello guys, welcome back to my channel Teach You Too Easy. So in this today's video, we are going to learn how to pass compound journal entries. So before we start with this, like, share and subscribe to my channel and forward to as many students as possible. So before we start with the compound journal entries, the small definition of compound entries. Compound journal entries are those entries in which you will be having two debits, either there will be two credits. In one particular transaction, there will be two debit entries, there will be two credit entries. That is known as, in simple, it is known as compound entry, where there will be two debit and one credit, and where there will be two credit, one debit. Okay? So here they are given a problem. This problem was there in the midterm question paper. Okay, so this is the problem which we are going to do, and this problem will come for 12 mark in your final exam too. It's a very simple problem, very easy problem. You can easily score 12 mark in this. So first is they are given pass the compound journal entries. Remember this, in the question they will tell compound journal entries from the following transaction. So first one is they are given started business with cash 2 lakh and goods 50,000. Then next they have given us credit purchase from Ashok rupee 10,000 and from Vikas rupee 50,000. Then sold goods to Mr. Mukund rupee 5,000 and Mr. Vikas rupee 5,000. Then commission paid to Meera via cash 10,000, by check it is 5,000. Then next they are given receive rent and commission. So you are receiving an income. Then received cash from Mr. Arjun rupee 9900 in full settlement of his account where rupee 10,000. So these are the 6 entries they are given. So we need to just incorporate this entries. इस एंट्री को we will convert, हम लोग इसको journal entries में convert करेंगे and we will pass the compound entry. So first one they have given us started business with cash rupee 2 lakh and goods rupee 50,000. So whenever any investment, initial investment brought in by the owner, then that time it is known as capital. So we never have an account called, we don't have any account called goods account. Either it will be sales, either it will be purchase. So here they have given, he has brought in, we have started business with cash 2 lakh and goods rupee 50,000. So these two things will go to capital account. So cash is a real account and goods is also a real account. So debit what comes in and credit what goes out. So these two entries we will be debiting and we will credit to where what is the mean it is coming as a capital. So here since date is not given, we will just assume as 1/4/22. We will just assume as 1/4/24. So here first one is cash account debit, then purchase account debit to capital account. So here the first entry is cash account is debit, then purchase account, that is goods we brought in, to capital. So whatever you commence with the business, everything goes to capital. In this place, goods, instead of goods, they may give you furniture, they may give you machinery, they may give you motor car, computer, whatever it is, cash and any asset we have brought in as an initial investment, that goes to capital. So cash account debit, purchase account debit to capital account. You can write a simple narration, the cash and goods brought in, being cash and goods brought in. Then next entry they have given us credit purchase from Mr. Ashok 10,000 and from Mr. Vikas 5,000. So it's a credit purchase. Normally the purchase entry is purchase account data to cash account. Hope you remember this. Whenever we pass a purchase entry, we write purchase account data to cash account. Yes, guys. So here, normally when there is a cash transaction, the entry will be purchase to cash. But when there is a credit transaction, instead of cash, we write the name of the creditor. Yes. When we purchase something from our vendors, they are actually known as our creditors. So we will write the name of the creditors. If it is cash, we write cash. If it is credit transaction, we write the name of the person. So now this is a purchase entry. So we will assume date as 2/4/22. Purchase account debit to. We have two creditors. One is Mukund to Mukund's account to Vikas account. So they are actually known as creditors. We have taken goods from them on the credit base. We need to repay them. So they are our creditors. The normal cash entry will be purchase account data to cash account. When there is a credit transaction, we will write name of the person. So this is since this is a credit transaction, we are writing the name of the giver of the benefit. Okay, so you can take this person as a personal account and this is a real account, right? This portion is a personal account. So credit the giver and debit what comes in. Okay, one is real account, the other one is personal account. So amount they are given as, here it is 2,50,000. Total amount is 2,50,000. Then next here we have is from Mukund we have taken total purchase we have done is worth 15,000. From Mukund we have taken 10,000 worth goods. From Vikas we have taken 5,000 worth goods. So B goods purchased on credit. Done. Then next we have is sold goods to Mr. Okay. So the next entry we will assume as 3/4/22. So they have given an entry as sold goods to Mr. Mukund 5,000 and to Mr. Vinay it is 5,000. So again here they have not mentioned cash. So we are assume you have to consider this as a credit transaction. So whenever there is a credit transaction, we will write the name of the person. Now Mukund and Vikas, Mukund and Vinay, they are the datas of our business. Okay. So now what we will do? Now what is the normal entry for sales? Cash account data to sales account. And now when you have a credit transaction, we will write Mr. X account data to sales account. So here we have a compound entry, we have two people. So we will write all the two data's name. So here first they are given as Mr. Mukund's account debit. Then Vinay's account debit to sales account. So normally we write cash account data to sales account. Since it is a credit transaction, so we are writing the name of the person. So here we have two people as we are doing a compound entries. So we have two people here. Mukund's account debit, Vinay's account debit to sales account. B, you can write narration B, sales made. If you want to make it as simple as possible, you can make it being sales made. So 5,000 is from Mukund, 5,000 sales we have made with Vinay, and total amount is 5,000 from Vinay, 5,000 from Mukund. So total sales is 10,000. Clear, guys? So let's move on to next entry. That is, we will consider date as 4/4/22. So the entry is given as paid commission to Meera. So we have paid a commission to Meera, that is 10,000 we have paid in the form of cash and 5,000 we have paid via check. So here bank and cash both are coming, both two accounts are coming, and who is the receiver of the benefit? Meera is the receiver of the benefit. When you do the payment, cash goes out, so we credit cash and bank account because check is there. Whenever you hear a word called check, bank comes into picture. We never write checks account in the accounting records. We never write goods account, we never write checks account, rather we write this bank, purchase या sales. Okay, so here Meera is the receiver, so Meera's account debit to cash account to bank account. So whenever there is a check, we are writing bank. So Meera is a receiver and the cash and check is going out of the business, so that's why we are crediting it. So the total amount is, Meera is receiving total amount 15,000, cash she is receiving as 10,000 and bank she is receiving as 5,000. So being commission paid to Meera. Done. The next fifth entry they have given is received rent and commission. Rent we have received 5,000 and commission we have received 10,000. So we are receiving an income. So normally when you receive an income, cash comes in cash account data to rent and commission account. Okay. I told you in the previous video also when I explained you about journal entries, all the transactions revolve around cash. You have to just consider whether cash is coming in or cash is going out. If it is coming in, debit the cash and write down the against via how the cash is coming, and when it is going out, credit the cash and see to what medium, mode or medium the cash is going out. So here when you receive the interest and rent, cash is coming in. Let us assume the date 5/4/22. So we are receiving the rent and commission. So we will write cash account debit to rent account to commission account. So totally we are receiving as 15,000 rent we have received 15,000 rupee rent, it is 5,000 and commission it is 10,000. So you can just write a simple narration being rent and commission received. Okay guys, so whenever you have income, cash will be debited because cash is coming in. Whenever you have payment or expense, cash goes out, we will credit the cash. Okay, so we will write, if you are paying a rent, we will write a rent account data to cash account. Since you are receiving a rent here, so cash account debit to rent account to commission account. Then next last entry we have is 6/4/22. Date is not given. Sometimes date will not be given in the problem. You assume it and you just write out. Here we have given, we have received a cash from Arjun, Mr. Arjun, 9900 in full settlement of his account. So actually we need to receive 10,000, okay, from Arjun, but we are receiving how much? 9900. There is a shortage of 100 rupees. So what does it mean? When we are receiving, these are actually our datas. So we are receiving amount from datas. So now instead of receiving 10,000, we are receiving only 9,900 rupees. It means that 100 rupees we have given a discount. We have allowed a discount for him. So when you allow discount, it is a loss. When you receive a discount, it is a gain for us. So when you allow discount, it means that he is your data and you have given a discount to him. So discount allowed is debited and discount received is credited, because discount allowed is a loss for us and discount received is a gain for us, so we will credit it. So what is the entry? Cash. Cash is coming in, so cash account, debit, discount, allowed, account, debit, to who is the giver of the benefit? Arjun. Credit the giver, so giver of the benefit is Arjun, so Arjun's account. So totally we are receiving cash as 9900, 9900, and we are allowing 100 rupee as a discount, and total amount we need to receive was 10,000 rupees. So you can just write being cash received from Arjun in full sentence. Okay guys, so this is the compound entry wherein you will be having two debits, two credits. Okay. There will be two credits and one debit. There will be one debit and two credit. That is known as compound entry. And narration, once again I will tell you, it's a summary of transaction. So when you write a narration, be precise and be very simple. If you don't know anything, just write down the transaction starting with B. That is called narration. Whatever the transaction, you can just write the same transaction. See here, first point we have written. See, we will consider this as we have paid to Meera. Okay, so paid to Meera by check and by bank. This is the transaction given in the question. So you can write being commission paid to Meera by check this much and by cash this much. That is narration. If you want to precise it, there is no specific format, but don't forget to start with being. Hope you have enjoyed and learned this video. From this video, before I conclude this, I request like, share and subscribe and forward to as many students as possible, so that everybody is benefited. So see you in the next video. Till then, take care.